So a lot of people like IPOs, a lot of people like going to Vegas, a lot of people like a lot of stuff. But 32 years ago in my book, The Wall Street Waltz, I coined the phrase that IPO means it's probably overpriced. Since then, there have been a lot of studies done that show that the history of IPOs is that when we look out at 1 and 5 year returns afterwards, and in fact 10-year returns afterwards, they're terrible. The fact is, initial public offerings have always been priced by the company issuing the securities and the investment bank or banks doing it to be at pricing favorable to the company, which means unfavorable to the buyer, or they wouldn't take them public. If the market doesn't allow you to take them public at prices favorable to the selling company that's issuing the securities and getting the money therefrom as favorable financing terms, they're not going to do it. Now, think of that another way, because you can also use this in a positive sense. When there's a relatively small quantity of IPOs, it tells you that the market's probably not overpriced, because when the market actually gets overpriced, you get a flood of IPOs. And not only do you worry about the first ones a little, what you really want to worry about is later when you get more and lower quality ones. Normally the first ones are relatively high quality companies that haven't gone public for a long time because there was an unfavorable financial world to do that in at terms that would be favorable to the issuer, who are then relatively high quality, so they're able to get those offerings off in a credible world at a credible pricing. Later you get more and more garbage and more and more garbage and more and more garbage, and you get to development stage companies, floating IPOs going public. And the lower the quality, the more you worry that the market's actually overpriced. So when you think about them individually as a buyer, they're bad for you. When you think about them as a macro sentiment measure, they're actually useful for determining when the market itself is overpriced. But the fundamental feature is to remember that IPO, the phrase that's used for initial public offering, really means it's probably overpriced.